All right. Nadro course. Little different lesson today. We're talking about doing the work, as we call it. You'll grow more as a trader from the things you do outside of actual trading. More. You will learn way, way, way more about your trading. You will make more improvements. You will figure out what you need to do to improve doing things outside of actually trading. Not unlike any other type of elite performance, I would imagine. Sure, is there experience we gain when we trade and things like that? Of course. I'm not saying the trading's worthless, but I am saying that for most any type of elite performance activity, you're going to gain more from the practice, the review, that type work than you are from the actual performance itself. Work and documentation, prep, journal, review, longer term reviews, statistics, and developing this week. Pyramid of trader development. I've drawn this a lot, talked about this a lot through the years. It's a really good thing to consider and remember where you are on this spectrum and whatnot, and really kind of the Nadro course and whatnot. We're all kind of taking this journey up this pyramid. And so if you recall, if we're sitting on any type of ground, well, then that's really your basics, right? Understanding what a bid is and an ask is and all that simple stuff, right? Candlesticks, right? From there, we started with what? Mental framework. We got to be able to think differently about our trading. We got to be able to eventually execute upon our processes, which we haven't built yet, but we got to put that in there somewhere. And I think it's really the kind of the base that we build from. And then from there, we start to understand, essentially market framework. We can get, as we saw recently, we get more advanced with our market framework and our read on, narrative and whatnot. From there, we start to put together, tactics. And with that, we're including our DVA, rhythm, short-term trading time frame type tools or lower time frame type tools. And then we build on top of that, haven't done it yet, but order flow. And the pinnacle of trader development is what we're going to talk about today, work and development. Everything funnels towards having things in place, to then be able to day in and day out identify what's going on, make tweaks and seek improvements, and then seek to implement them the next time we go out and perform. That's the epitome of trading. That's why so many people start out trading thinking that it's going to be maybe about making some income, and then other people thinking it's going to be about cracking the code of the markets, and other people think it's going to be about charting and they like it or the rush of it or whatever. And then for those who stick around and figure it out, it ultimately becomes about this kind of self-development and growth and deeper understanding of self and markets and things like that. And it's the work and the development that goes into that. It's not the tactics. It's not market profile. So sorry to burst your bubble if you just want to talk about the sexy chart stuff, but again, today here, I've been tasked. You guys have paid me your hard-earned money to tell you what I think you need to be successful and to reach that CPT status, and that's what I'm going to deliver to you. So even within a strategy course, so to speak, like this, we're going to talk about the work of developing. Every amateur wants to get in there and trade, feel the rush, conquer the markets, buy, sell, short, cover. How much fun is that? It's a lot of fun. Very few of these folks love markets and trading quite enough to put in the type of actual work required to see the kind of improvements they need. Very few ever get past a love affair with the get rich quick opportunity. They spend their day toiling away, lying to themselves, thinking they have something figured out. Those are some brutal words. The CPTs, on the other hand, put in the work outside of just pressing the buy and sell buttons. That's not the work. They're dedicated to their craft. They treat it like a business and what it is, which is an elite performance activity. You are essentially wanting, here on this course today, you're essentially wanting to become, in some form, the trading version of an Olympian. I'm not kidding. And you need the dedication, the training regiment, those type things that put you on that level. And a 6-week course is not going to do it. But giving you what you need to then go make it a lifelong journey. Not that you won't be a CPT until you're 80 years old. If you're 20 years old right now, what I am saying, though, is that you're armed with how to go do things the right way and how to go do particular things that are going to get you there much quicker than you ever would, if you get there at all. So documentation. Remember the whole deal that I drew out multiple times around the impulse, typically leading straight to an action, but we need to insert process rather than just like directly acting out of impulse or whatnot. So right now, more than ever, this is the time. We need to start getting clarity, each and every one of us, around, okay, I'm learning these concepts. I'm learning how to structure trade ideas. I need to start documenting things. I need to start putting some things down on paper or Evernote or Notion or whatever you want to use. And by the way, I guess I could mention that, like, doesn't really matter, guys. Whatever you want to use, whether it's handwritten for parts of it and then digital for others or all digital, whatever you like, doesn't matter. There's pros and cons to each. And ultimately, if one is the only way you're going to do it, then that's the one that's right to do. Doesn't matter if there's cons to it. You could scratch all this out on napkins for all I care. But if you put in that thought process and you put in that work of doing these things, you're going to get better. So I've broken apart the documentation we need into kind of two segments. One is around trading process, and the other is around routines. And so for our trading process, we have three main components. The overarching deal, almost like the overarching mental framework that we have to operate inside of. Everything about our trading has to operate inside of a risk plan. And then we can develop a playbook, right? A book of plays, just like a sporting team, right? Okay, let's do this play. except in our case, the market tells us which play is being offered. They need to have names. They need to have clarity. I was talking with just someone earlier today around the way I generally teach NADRO. I don't exactly teach you this exact time frame does this exact thing, and then this exact time frame does this exact thing, and the market profile chart does this exact thing, all of these things simultaneously, and then the intraday does this exact thing. That's not how I teach it, is it? I teach it as a series of frameworks and understanding what opportunities and narrative looks like across time frames. And then you're going to have the choice in terms of how you structure your playbook. Some people will focus on mean reversion type plays. Some people will focus more on shorter time frames with scalping. Some people will focus more around the really, really longer term VWAPs and general value migration from composite structures is more of a swing trading approach. I'm giving you guys all these keys and all these things. And I also show you exactly how I take some setups and exactly how I see what's unfolding each day. But then from there, how you have the ability to make it your own. And I think that's very, very important. This is not a moving average crossover system. Just to give you a simple example, where you pay me money and I say, here you go. Here's the secret. Here's the indicator. Here's the trade. Because guess what? That kind of crap doesn't work. I'm teaching you something that works and something that's robust and something that's flexible across time frames. And it's also very important that even if the moving average crossover system did work, it wouldn't work for everyone because everyone's not kind of made the same way and has the same needs and strengths and weaknesses. Even if it had edge, everyone still couldn't go do it because it's not suited to them as a trader. Now, I don't think that I'm talking about some things in the future here, right? So everyone here, come back to the here and now with me for a second, and let's focus on doing the task at hand and learning the basics and just looking to apply things kind of like I'm teaching. But I just want to plant that seed there that as you develop some of these processes, as you develop your own playbook, you're going to get to put your own personal touch on that, and that's important. So enjoy it, have fun. If trading's not fun, then I don't know. I understand it's a business, but I do think it's one of those things that it's so dang hard and it's so taxing on us, I think, and demanding. If you can't enjoy it, if you lose all fun from it, it's probably not going to be sustainable. So ultimately, these are kind of things we talk about in advanced group mentoring, is developing your niche and whatnot within the space. Number 3 is obviously the trading plan. And it needs to consist of some real core components. You could have more things in it, but you definitely need these things. How do you identify general opportunity, bias, hypos, lines in the sand, those type things, right? Big picture view. How do you see what's unfolding, where there's opportunity? Most people go to point C on this for entry triggers, and they call that an opportunity. Maybe this is a light bulb moment for some of you. Combining a bigger picture opportunity with a trade trigger pattern or DVA setup or whatever opportunity is a more robust and more profitable way to trade than just how I used to trade, which was just on that one time frame. And you say, okay, there's my setup, right? Not good enough. So we need to A, identify the opportunity. B, we need to then monitor for if that opportunity is coming to fruition, if it's setting up for us to then begin looking to stalk it. C, we need to have documentation around what do we actually look for to pull the trigger? What does that look like for us? What kind of tools are involved? What do we need to see? And then D, how do we manage things from there, right? If it's a loser, where's the stop? Obviously, the sizing and things like that are going to be taken care of from number 1, the risk plan. But where's the stop? Does the stop move? If, when, where, how? Do we scale out? Do we scale in? Do we add to positions? How do we handle a core position if that's something you're doing? How do I handle reentries? Is there a limit to the number of things, right? And that's one thing that can be in the risk plan we'll talk more about as well. Risk plan is not just your daily loss limit and things like that. It's all kinds of stuff. Routines, the second category here of documentation that you need to be developing. One is kind of a guide to how are you going to go about pre-market prep. I can't tell, probably several years, I used to have essentially like a checklist, right? Hey, go check this. Okay, I did this. Okay, now go check this. What's the answer to this question? Okay, I did this. You guys for sure should be back where I was years ago, and you should be very procedural, process-driven in your pre-market prep routine. And that includes multiple aspects of pre-market prep, which we're going to talk much more about. But you shouldn't just be trying to remember what you've learned from a live NADRO course and just winging it each morning. You need to develop process and routine around that, and then refer to that, and then go about those routines as you do that. A lot of you are probably doing that. Journaling, right? You need to know what is, it's like journaling is a segment of your business. It's a business line. You need to have like a business plan for your journaling. That's kind of what each of these things are. It's like having a business plan, or it's like a helicopter pilot or fighter pilot or whatever having one of those laminated kind of like little multiple ring or single ring kind of binder things that they pull out, or like an astronaut, and you something goes wrong, you pull out the thing and you say, okay, here's what we need to go through and check, and boom, 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 boom. Your journaling needs to be that way. Your end of day review, number 3, needs to be that way. Your longer term reviews, number 4, need to be that way. And then the actual entire trade plan from trading processes number 3 over there, you need to have kind of scheduled times and whatnot to go back and reassess it, tweak it, update it, review it. And hint, that's not going to be every day, but it's going to be more frequently for you guys right now, because you're still having light bulb moments, and you will continue to have them. You're still learning new things. You're still putting things together. So your trade plan is going to be very much a work in progress. But then for someone like me, it's going to be a much slower changing thing, perhaps only with evolution of markets themselves and what works and what doesn't, and different things like that. So a whole lot of documentation here. This is a lot of work, but it has to be done. The cycle. All of this is a cycle. It's not just, don't think of prep or journaling or review or whatever as individual segmented things. It's not. In fact, a good way to do this would have been to say, we prep, and then we go trade, and then as we're doing that, we journal, and then once we're done, we review, and that review leads us back into the prep for the next session. Constant cycle. They're not standalone items. We get ready for the session leaning on things from our past review. We begin trading and journaling throughout the session, leaning on things from our prep. We review, leaning on things we garner from our journal. And part of the last bit of the review is knowing what's going to be on the next prep. So it's all constantly feeding into the next steps. And then obviously we're going to sprinkle in longer term reviews into that cycle, right? Into kind of a longer term cycle, use of statistics and all that good stuff. They all work together to drive the growth. So let's talk about one of these pieces in particular, prep. Prep starts with self. I know most of you are not doing this. I know most of you are probably rolling out of bed, getting a cup of coffee, firing up the monitors, and let's go, baby. Don't do it. Don't do it. Don't do it. Don't do it. That is not how Rafael Nadal is going to step onto the tennis court. That is not how Tom Brady is going to step onto the football field. That's not how Messi is going to step onto the pitch. That's not how any of these guys are going to, the time leading up to them going and performing. And it doesn't have to be just a physical thing. It could be a mental activity. People are still, it could be a singer getting ready to come out and do a concert. So for us, prep starts with self, just like in a lot of other performance activities. You need to take care of yourself physically, mentally. You need to be hydrated. Dehydration is easily a problem for folks. You need to be fueled, right? I understand maybe, some people don't necessarily eat a big breakfast or whatever. A lot of times I'm certainly not eating a big breakfast, but I am getting what I need in terms of, carbs and protein and hydration and I'm going to take care of that. Don't just dive into the charts, guys. Yeah, we can remove distractions for sure, but that needs to be, more of kind of your general trading environment that you're creating, which could be a part of your overall business plan for sure. So as we're prepping ourselves before we dive into charts, maybe some quiet time. It could involve prayer, could involve meditation. At the least, I think it needs to be some quiet time, not scrambling, checking emails, paying bills, that type stuff. It needs to be you. I hate all the catchy words and I try and avoid them at my best, but I do think there is something to the word of being centered, right? You need to get grounded with yourself. You need to get in tune with yourself. You need to, be calm, relaxed, clarity. And so another thing that I think is very helpful in terms of getting humans into an ideal state of mind is one of gratitude. I think a lot of times if there's, look, I think a lot of, well, I'm not going to say it. I think that gratitude is very helpful because as traders, there are, for all of us going through this difficult and challenging and tumultuous world and thing we call life, okay? We're all dealing with different things at different times. Sure, sometimes life is good and whatnot, but a lot of times there's varying degree of problems in our personal life or whatever. That's just the way it is. So tapping into kind of a sense of gratitude and getting some positivity going can be very helpful in getting you to more of a peak type state. A self check-in, right? I know this is easy it sounds easy, but it's very easy to overlook and very easy for these things to wreck a trading day. I had a trader yesterday, lose about 30 R in a day, right? That's or Friday, I guess it was, right? So these things happen. And I think that what we're doing here in terms of self prep is one of the biggest keys, secrets, benefits, whatever you want to call it, to avoiding some of the disaster days that are possible for all of us, no matter what you think. You're only a few clicks away from the button from doing something like that, as long as you've got the buying power to do it, or non, automated risk in place, which, by the way, are all great things to have. So a self check-in: how are you doing physically? You could be way too tired. You could be developing whatever latest pandemic is going to be a part of the world these days. Who knows? You could be sick, getting sick, right? You need to weigh that and check in with that, rather than just kind of powering through it and whatnot. Powering through is not the way to trade. Emotional, maybe a pretty bad dispute with the spouse. Maybe your teenager has done something to really let you and the family down. Who knows, right? I don't know. But you're emotionally not centered. You're upset. These things happen. So you need to check in, and you need to understand, just like, was I too tired? Was I too sick? Am I too upset to trade? And you need to put the manager hat on, the risk manager hat on, and you need to make that game time decision. Confidence, easy to overlook, but if you've had 5 days where all your trades are working and whatnot, and we all have periods like that, you might be getting a little overconfident, and guess what? That can lead to some real problems in your trading. If, on the other hand, you are struggling, can't seem to hit the broadside of a barn with a winning trade, and you're just getting pretty beat up, again, opposite type problems. Rather than, maybe if you're overconfident, you're going to violate some risk or overtrade. Maybe if you're underconfident, you're going to have a little hesitation. You're not going to pull the trigger. You're not going to be as aggressive as you need to be successful. So just simply checking in regard with these things is hugely important, and can help you, just by becoming more consciously aware of the situation, help you to understand yourself and your state as you come into the trading day. If you are going to give yourself a pass and say, I am going to trade, just being armed with kind of where you're at can prevent some of the subconsciously type rearing of these issues from showing up without you really understanding what's going on. I think connecting with goals is also important. It's similar in benefit in terms of connecting with gratitude. Connecting with goals, it aligns you with who it is that you are looking to be. That could be personally, that could be professionally as a trader, all kinds of things, where when you connect with those things, you're going to give yourself a better shot of being what it is that you need to be in order to achieve the goals. If you're not connecting with your goals, it's going to be way easier for, almost in a sense, like we talk about the impulse to lead to an action. It's going to be way easier for you to be in a state where you're not connected with those goals and you're deviating from them without really being consciously aware of it. But if you stare them down in the face before you start trading, it's going to be more difficult for that to happen. Doesn't mean it can't happen, but it's going to make it harder, and that's important. We haven't even got to charts yet, guys, right? We're still working on ourselves here, just checking in, connecting. And then we want to connect with some recent review work. Remember, these things are all connected. Today's process goals that I would have. And then some visualizations. It doesn't have to take long. It could be 60 seconds worth of visualizations. You could do 2 different exercises of 30 seconds, whatever it might be. But visualize achieving the thing that you want to achieve. Bonus tip, I like to do a negative version of a visualization where I visualize what it feels like to fail at the process goal and how that makes me feel. And I like to use that emotional boost to say, well, that's not the path I want to take today. Let's take the good path. Let's connect with the goals. Let's be grateful for things. Let's be aware of where we are physically, emotionally, confidence wise. And let's go kick some butt. Now we can get to some charts and stuff, right? But hold up, just before we do that, a couple things. Check that econ calendar. You guys know I don't trade off the news. I don't, look at, EIA comes out. I don't look at what the number is. I don't care. Non-farm payrolls comes out. I don't look at what the number is. I don't care. But you need to know where and when those volatility events are scheduled each and every day. You don't need to be putting on a bunch of risk or adding to a position or whatever. It's not really like very, very, favorable in terms of, it's already gone in your favor. So you're building a cushion for volatility. You need to understand those things. Also, you need to be trading the right dadgum contract, right? Where are we in terms of rollover? Knowing where we are in terms of rollover can, in fact, as you get more experience, have some effects on how you approach the day. In general, the thick of rollover, a lot of times I'll kind of shorten my targets and be a little more conservative with things, or maybe you could say aggressive even with exits, because a lot of times rollover can be kind of choppier, lower volume, less really, really great moves. And now, after all of that, I think it's time to begin your top-down NADRO analysis. Let's get to those hypos, right? Long-term VWAP analysis and its summary, distribution narrative analysis, then its summary, and then a full summary, which gets us to kind of hypos. How do we handle dissonance? How do we identify confluence across these things? Now, prep is done. And there will be one or two little prep things we do here, but now it's time to transition from prep to journaling. The main prep component is complete. Journaling is like having game film from your sporting event. Your memory of the sporting event and what happened is tainted. You are human. You are biased. You have all kinds of biases and problems. So your recollection of what you did and why exactly you did it and what you were thinking about doing at this time but then didn't or whatever, it's pretty bad as a trader as you're dealing with losing money and being wrong and dealing with your natural human self. If you don't journal, it's like you don't actually have game film for Tom Brady or whoever to go sit in the room and review. You're just thinking, oh, well, now we'll see what happened on this play. And you might have a good memory of some things, but it's never going to be as good as having some film. So at the start of the day, at the top of the journal, put some header stuff, right? The date, the news events scheduled for the day that are impactful to the markets you're trading, and your process goal for that day. Big, bold, up at the top so you can refer to it as you're journaling once you're now going to be sitting down to actually trade. So all that we just talked about thus far, prepping yourself, prepping your analysis, understanding what's going on in economic releases, all that type of stuff. Only just now are we getting to, okay, let's start trading. So what kind of things might we journal? And I'll go ahead. I'm going to skip to the very bottom of the slide here, and I'm going to tell you this right now. Every single journal entry has to be time-stamped. If it's not time-stamped, it's not really like game film, is it? It's like a collection of thoughts, and some of it you could extract some value from, but if it doesn't have a timestamp attached to it, it's not nearly as valuable because you can't tell where exactly the hard right edge was of the chart as you were thinking that or doing that or considering that. So it's very important. So timestamps for each one of these. Number one, market observations. Hey, that was an interesting sequence there. I'd like to go back and study that later today. Make a note. Basic stuff. Hey, you know, I need to get better at observing these spring patterns. I think that was one right there. I'm going to just jot that down. I'll go study that later because you need to stay focused on trading rather than doing research and development during the session. And that's kind of what that's for. You make a note so that you can go do R&D outside of trading hours. Number two, observe noteworthy thoughts or feelings, right? You don't have to jot down my dog is cute. It needs to be noteworthy. What could be noteworthy, right? Like, oh man, I'm thinking about just doubling my size right here. Or, you know what, I'm thinking this trade is definitely not going to work. Or I'm thinking, you know, I should absolutely scratch out of this trade here. I'm not going to, but I know that I should. Why do I think that? Oh, it's because I think this, right? Number three, trade. And this is one of the most important ones. The trades, the potential trades, right, that you're considering or stalking or that might set up. That's very, very important. Right? Harkens back to like the 0535 exercise on the blog. Because if you at all times throughout the session had journal entries and were very clear on journaling every time your not mindset, but your what you were considering, if anything, was setting up. So you're stalking long, you're stalking short, or you are sitting on hands by design, right? Based on read on narrative or whatever. That's very important that you monitor what condition your trade stalking is in at every point throughout the session, whenever that changes. Because guess what? When we get to the review and we look at the day when it's all said and done, and you say, oh, Johnny, you idiot, you should have bought here. We're going to need some game film to go back and look at where Johnny was and what Johnny was thinking and considering and could potentially see at the hard right edge at that time. Otherwise, it's all BS. You're going to be like every other trader out there on Twitter. Oh, you know, woulda, coulda, shoulda. Oh, I'm an idiot. That was the great setup. I was so stupid. I knew I should have done. Okay. Thanks for playing. Enjoy your illustrious, amateur non-actual trading career. Get some real game film. Put it down exactly what you're capable of seeing at the hard right edge. And it's going to enlighten you as to where you're at on the spectrum of being able to see opportunity. I've said this a bunch of times, but I'm going to repeat it real quick. We have a million thoughts throughout the day, right? And there, for some of you, you may see a little blip in price action here or there, or a little wick or whatever, and you may think, oh, I might should get long here. And because you have so many of those little things, like, oh, that could be a long, that could be a short, but they're not really. And so you don't do anything about it, or hopefully you don't. But then at the end of the day, when you do see that move that went from, up 100 points in the S&P, you're going to say, oh man, I said to myself, oh, that could be a long. Well, guess what? It's not a long for you, right? So you have a million of those little thoughts, but if you actually write down with enough conviction that it's going on the paper or on the Evernote or Notion or whatever, that's the true read that you have, not just all those little thousands of thoughts elsewhere. It's pretty simple. I think it's important for newer traders, newer NADRO traders. Write down the rationale for any and every action you take. Eventually, you'll be able to do it in like a couple of letters with acronyms or the name you have set up or whatever. But right now, you need to really jot down, okay, this is my hypo 2 for today. It's based on the confluence of, monthly developing value area low and the composite value area high. And I'm taking an extreme fade from intraday developing value area low. And that's the trade. And if you decide to do a particular thing, like take a scale out or whatever, write the rationale down, why you did any trading actions, entries, scratches, exits, moving of a stop, scale out, scale ins, ads, whatever. Trading actions taken. Jot down the timestamp and the rationale. Affirmations, just like we started out in week 1. You can journal affirmations. Number 6, noted deviations from process. Did you make some kind of on-the-fly adjustment that you think is absolutely the right thing to do? Or did you immediately realize, oh, that's an error. I should not have done that, and I know it right away. Observe that, understand it in the moment, and try and journal a little extra right there as to, here's what I think caused me. Here's what I was thinking. Here's the emotion. It was just boneheaded. I wasn't thinking, whatever the case may be. Jot that down because you want to learn from deviations and errors, especially. So now that brings us to the end of day review. Remember, it's all a cycle. We prepped ourselves. We prepped for the market. We kept a record on what went on. By the way, this is a mental game, isn't it, guys? We're sitting in a chair or standing at a desk or alternating, but it's not very physical. It's mental. And so we need to keep a record and get that internal game film out in the open and objective. So we journaled. And now, wow, we have some great data to begin a review process. We can refer to our prep. We can refer to our self-check-in. We can refer to that game film of what happened internally as we performed. Wow. Think about what you have to work with there to now review the performance as opposed to, yeah, I got long here and I got short here and I definitely missed that opportunity there. That was a great trade. I should have been in on it. Okay, let's do better tomorrow. Let's go, team. No. Okay. Daily review. Here's some things that I find helpful. How did I perform today? Remember, redefine. This comes back to mental framework. How did I perform today? As I have redefined what it means to win. How did I do today at successfully achieving my process goal? The one thing, come hell or high water, that I want to achieve today. And I encourage you to get quantitative about it. Come up with a way to tally it throughout the week. Typically, it's typically I refer to a daily process goal because it is our process goal for the day. But really, these things shouldn't change day after day after day. Otherwise, you're not really adjusting any habits, and you're probably not making meaningful strides. You may have knocked it out of the park the next day, but you probably still need to knock it out of the park for a few more days at least, right? Before you go flipping what you're working on. So, maybe we should call them weekly process goals. And that's something I've considered changing the name of. But anyways, get quantitative about it and score yourself. If you're supposed to do X, Y, Z, and you took 5 trades that day and you messed up on one of them, you scored at 80% for the day. Give yourself some kind of a grading system like that. And then we'll talk about longer term reviews and stuff as well, like tallying it up at the end of the week. Number 2, review your prep work. How good were your hypos? Forget trading, right? Forget what you actually did. Take a look at your read on the narrative and what you could see that was most clear at the hard right edge before the market opened. And then take a look at how good is that at the end of the day. For example, sometimes over the past couple of weeks, I've omitted, in particular, a weekly prior value level and said, no, that's not as important for me today. I'm going to focus on this or that. Turns out the weekly prior value level was pivotal during this session. And so I think that's something I talked about in one of the 5 billion videos or lessons or whatever that I've done over the past few weeks. I know I talked about that somewhere. It was probably with you guys. And so I wouldn't know that if I wasn't reviewing that, right? Take a look at how good your hypos are. Does not mean that you're going to eventually get to the point where your hypo 1 is just what happens every day. No, never going to happen, okay? But you can and will get better at hypos, ranking and distilling information. It's complex. It's very difficult. It's not something you snap your fingers and you're better at. So incorporate that into your review process and work to get better. Review each of your trades. I think when people think of a review, they probably do number 3 and they're probably done, right? So we need to do that. It's the most basic type of thing that you might think of with a review. You really need to review the trades you made, not from the lens of hindsight, but from the lens of when that decision was made at the hard right edge. Was that the right decision according to process? Doesn't matter if the trade was a loser. Doesn't matter if the trade was a winner. Doesn't matter if you got top ticked out of the market like me today. Was it a good decision for your process? That's all that matters. You want to achieve, the number one. If we did what are those things called? A word cloud, I think, of everything I hear from people and everything, all the struggles and challenges with trading and what people are after. What's the one word? It's consistency. That's what everyone's after. And if you can't be consistent in your decision making according to a process for giving you some consistency, then what in the world do you think your results are going to look like? There's going to be some good results and some bad results, maybe, if there's some skills that you have around things, but it's not going to be consistent unless, garbage in, garbage out, right? Consistency in, consistency out. Number 4, were there valid trades? I should have underlined the word valid. Were there valid trades for your process that you did not take? Just because the S&P ripped 100 handles lower doesn't mean that you should have been short or could have been short and that it was a missed opportunity for you. That is just wrong on so many levels. So if you did miss a valid return pullback of a CVA that was confluent with a return pullback of monthly developing value, and it offered an imbalance pullback intraday, and you missed that trade, it's time to review. Why was this? Where was your focus at the time? Did you have could you see it unfolding, but you had too rigid expectations, or something that you put too much emphasis on, or something that was maybe outside of the process, so you didn't pull the trigger? Or was it a mental framework deal? Why was it that you were aware of the opportunity but unable to execute on it? Or was it that you were unaware of that opportunity? And if you're doing a good job of journaling, you're going to know, well, for that really great short opportunity, I was actually stalking long at the time. I was looking for an opportunity to get long, and it kept going down, so I never did get long. But that's why I missed that trade. Let's go back and figure out, why was I stalking long there? That was against my hypo, or you didn't shift when hypo 1 broke down and you should have been switching to hypo 2. And people want to always ask about that. Well, it's freaking simple, guys, right? It's, you have a line in the sand with a hypo, else you don't have a hypo at all. And when the acceptance picture changes relative to that, well, you shift your strategy. You shift bias. You shift whether you're stalking long or short or nothing. Number 5, any key errors you're making, especially ones that you're seeing repetitively in your trading. That's like cancer. Number 6, this is very important, not to overlook, easily overlooked by a bunch of type A, work hard traders, want to get better. What did you do well? What did you do a good job of? Don't just beat up on yourself over the weaknesses and errors and valid trades you missed and blah, blah, blah. Your hypo wasn't good enough. Surely you did something well. Maybe you had 5 losers in a row, but every one of them were perfectly timed with rhythm, right? Find something that you're doing well and continue to build from those strengths, because it'll pay dividends. Remember those interesting observations from our journal. We can review them. We can go back and do some market replay sequences, even some maybe tricky sequences that we underperformed or whatnot. And then from there, I think you're ready for a really nice summary of the day and what you need to be focusing on for the next day. And then very importantly, let go, stay balanced in your life. Don't review charts until 1 a.m. and then wake up at 7 a.m. and try and do it again without a self check-in, right? Obviously, there's some other things you could throw into daily reviews, a screenshot of maybe your fills, all that kind of stuff. There can be some image type work you do with this, and some write-ups, and you could, I think it's pretty cool to do a review. It could be in the journal as well. It depends, but you have a NADR, eventually O as well, acronym, and you list out what each of them were. That's going to be something that's pretty cool, and that could be as simple or as complicated as you want to make it. But it needs to be something, if you showed another NADRO student, they get it, they understand the trade, right? If you say, this was my narrative, the acceptance picture checks out, this was the DVA type trade location, right? Rhythm was compromised, or rhythm was perfect, or short-term rhythm was compromised because I was using more of a medium-term rhythm or a law 10 compression play. What about longer-term reviews outside of the day? Notice we didn't really focus on P&L here. We didn't focus on any kind of stats or anything like that. I don't think the daily reviews are really for that. The day-to-day grind needs to be you assessing the quality of your decision making relative to your process and your methodology and strategy and playbook, right? But now if we step into like a weekly review, well, now let's take a look at outcomes. Let's review that body of work. What's the P&L look like? Remember, we could get objective about our overall daily process goal hit rate. What does that look like? What do our stats say? We're going to talk more about stats later. I'm just going to put that there for now. What do the stats say? What's working? What's not working? What were overall conditions this week? Did I adapt to those conditions? Sometimes conditions are absolute crap. And if you walk away with a losing week or something like that, that's fine. It really is fine. You're not supposed to win every day. You're not supposed to win every week. And then obviously that you want to take a look at how the performance was, how well you're doing at tracking towards goals, and like, mainly I say goals, I really mean process driven type stuff. And what do the stats tell me? And again, we're going to look at how we do that. But then what's the point of a weekly review if you don't really distill it down and don't just say, I got to do better, right? What are things that are within my control that I can take care of next week? You got to bring it to kind of an action item at the end. Not kind of, an actual action item. Monthly reviews. What's your performance this month? What does it look like based on the past month's goals, key takeaways, action items, that same type stuff we talked about on a weekly basis, which, by the way, can incorporate some of the monthly stuff, which, by the way, can filter into your daily process goals. Again, it all connects. Again, general thoughts on how you did this month and whatnot. You might just know some things right off the top of your head you want to get on paper. What were the overall conditions? How did you handle when you do one for September? How did you handle the pickup in volatility? Statistics are great on a monthly review type basis. This month versus last month, how are things trending over time? We'll talk more about it. And look, more of the same, but on a high level, not like I made this mistake today and here's what my journal said about it and here's, blah, 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 blah. No, it's like, what are things that you're doing poorly repetitively? I keep doing this mistake. It's apparent from my weekly reviews. You're going to have a really good, if you're doing daily and weekly reviews, when they get around to month end, you're already going to have a really good read on things you're doing poorly, things you're doing really well. Where are your best trades coming from? Statistics will help with that. Using analytics tools like TraderView or Journalytics or all these different things, or your own spreadsheets, doesn't matter. You're going to be able to find, I'm seeing a lot of success from this particular type of play versus, I'm losing money like big time when I try and trade this, or when I try and trade this particular market. And I think monthly is where you really want to take the time to actually set some goals. And what do I mean by goals? That's different than like a daily process goal or something action item wise for a weekly review. I think goals in this case in a monthly review are more about, here's the kind of an outcome based thing that I want to see improve. And that's why I connect it there with an objective measure. So really we're connecting it with that third point there, statistics. For example, If you have been, I was talking with a student the other day, and they have been getting into too many what I call battling a sequence type sequences, where they just kind of get it in their head that this is what needs to happen almost. And they want to kind of win the sequence by ultimately being right, by ultimately having the trade work, by not allowing the trade to work without them. And so what do executions look like for that? Well, it's a bunch of like over managing re-entries, stopping out, re-entries, probably too many of them, right? 4, 5, 6 of them in a sequence. They're battling the market in that area. And it's just not working cleanly, so it needs to be let go. So if that's happening, what might that look like in terms of statistics? Well, for one, I think the main thing, it's going to lower your win percentage. You start to see where you have these like, you know, periods where over 20, 30 trades or whatever, you're seeing a win percent that's like 15%. Right? I've been there. Trust me. I revisit there from time to time. So it's that's where you can say, okay, and it's not just the statistics. It's not just the statistics, and it's not just knowing that you're battling some sequences. It's connecting the two. One can alert us to the other, and we connect them. And so, what could some goals be? The goal is do not end your monthly review and saying, don't fight a market sequence. It's not good enough, right? You could set an actual objective, measurable goal of having your win percent 40% or higher, knowing that a key to achieving that is going to be implementing a particular rule around 3 strikes and out, and understanding that you can't just chop up 6R in a choppy sequence just because you think a particular trade or hope a particular trade or idea is going to work. So it's really important. Combine the statistics to let you know if you're truly getting better at some things you've identified, such as the example I've been giving here. Um, really, really great thing for goal setting in terms of a monthly basis and reconnecting with those each morning with your prep, right? What you're working towards in September. Because you know what happened in August and you know something tangible, and you can monitor your stats as you progress towards achieving it. And it's not just like, well, I feel like I did a little bit better than last month, and you're just typing a review. Like, what? Stats. We've referred to stats a lot as we talk about review work and whatnot. Don't trade to shape stats. Trade according to like your process and whatnot, like you're supposed to, and then use your stats to shape that process and shape your rules and shape your trading. I fell into that trap early on where I had stats. I was always drawn to stats from the get-go in trading. And so I'd find myself like doing something in the trade just to make stats look a certain way rather than trading according to what the market generated information was telling me to filter through a process, which I didn't really have at the time, right? So don't trade to shape stats. Trade according to your process. Use the stats to then shape your trading. Sample size is important in stats. That's why I didn't include them on an end of day review, right? You took 6 trades, maybe even a very active 10, trades that day. It doesn't really matter what the stats are. It truly doesn't. Some trades go your way, some don't. And we need to get to a certain collection of sample size before it starts to make some worthwhile information for us to review. So once you have that sample size, first I like to kind of take a look at a snapshot. Look at the daily P&L. Do I have larger winning days than losing days? Do I have more winning days than losing days? And make sure that you don't see these giant ramp ups in volume on losing days. That means you're losing, you're fighting, rather than saying, not performing well here. Let's wait for more clarity, that type deal. Now, some days I might have, it's fairly rare, but I might have one single round trip, right? And that might be on my best days where I really nail it. I get in from the best trade location and I hold it, and it's all great, right? I've been scalping a lot more lately, so that hasn't. I'm trying to work back towards doing more of that, but that's not going to have the same amount of contracts traded as a day where you have several scratches and then maybe one works and then maybe it stops and then there's a re-entry or two, right? You're going to trade more. So some of that's normal and acceptable and normal by nature, but the huge ramps in volume, let that be a warning to how you're handling losing days. I like to take a look at instruments traded, right? Crude oil, gold, NASDAQ, S&P, the Bund, what's going on? Where are you making money? Where are you losing money? Performance by hour of day. I'm growing less and less of a fan of performance by day of week these days. I'm not finding that, I've been looking at a lot of trader stats for years now. And, some people say, well, I do bad on Mondays or, that type deal. I'm just not finding that very relevant for hardly anyone, unless there's like a substantial life event, like you're typically very rushed on Mondays because it's your day to take the kids to school and do particular type thing, and then you end up rushing your morning sessions. I don't know, but unless there's like a very different schedule that you have on a particular day and that coincides with that day performing poorly, then that's meaningful information, right? But I really do like performance by hour of day. And your classic type thing is well, there's a couple different patterns that I typically see. Sometimes people perform really poorly around the open because of that kind of pickup in volatility. Some people perform poorly pre-market because they're trying to get out ahead of things, and impatient, can't even wait for the market open to start gambling. Some people make all their money around the open where the volatility is better, and they give it back during the lunch hour when they should be not trading. All that kind of stuff, right? But take a look at that, monitor it. Number 4, it's like the tryout. It's like anything else, right? What's your risk adjusted performance? Okay, so you made $3,500 this month, but did you draw down 10 grand? Well, that's not so good. Okay. Now, we all have drawdowns, and from time to time, your drawdown to P&L is not going to be so good because you had a big drawdown. But in general, you know what I'm saying. Like a great month is one where your max drawdown was $1,000 in order to make 5,000. Like those type things is what really matters. Obviously, 5, 6, 7, pretty common sense stuff here. I want to know what the average winner looks like over the snapshot of the month or whatever the time frame might be. I want to know what my average loser is. I want to know what each of those are individually. And then I'm going to kind of do some math and say, okay, what's the ratio of those? Is it 1-to-1? Is my, I've got a student right now, their average loser is bigger than their average winner. That's not going to cut it. Not going to cut it. Max drawdowns typically over the period. So if we're reviewing all our trades for the month, what did you draw down in order to achieve the P&L that you had? Win percent, obviously a big component of expectancy. Largest gain and largest loss, and the ratio of those two is another eye-opening statistic. Your average winner is $220, and your largest gain is $245. Probably not letting some winners run, right? Probably not achieving some high R multiples at all. Now, if you're kind of more of maybe you're a true like one-to-one scalper and that's what you do and you depend on high win percent to be successful, that's a niche type thing. But general NADRO students, we're putting risk reward in our favor, and that's what it's all about. So you need to have some big gains. What about large losses? Well, that's more of kind of a risk deal, which can alert us to problems there. Average hold time for winners and losers. That can be very enlightening as well. I know for me, I am not currently happy with my average hold time on winners. And so I'm looking to set some goals and have some daily process goals and see that objective performance via that statistic improve in my own trading right now. Right. So this was snapshots, right? Over the month, what do the standalone numbers look like? What's my average winner for the month? What's my average loser for the month? You know. Now this is where I think I do this via TraderView. I'm not sure of anyone else that does this. In fact, I started doing it in Excel probably back in 2009. Oh, that's 11 years ago. I did this on my own in Excel, and eventually I developed a relationship with TraderView and whatnot, and I requested that they put this type of statistic into their package, and they did that, and it's awesome. So how do the key components of Edge, right? Win percent and risk reward look this month relative to all year, this month relative to last month, whatever kind of data you might have, take a look at it. Win percent, and I'm going to go ahead and define MAE, MFE for everyone, just so we're clear, because you see all of these use those terms. One stands for max favorable excursion, and one stands for max adverse excursion. And so let's say we get into a long position at this price. Doesn't matter what it is, right? So there's our break-even point, the point of entry. And let's say that it goes in our favor a little bit, goes against us a bit. Our stop's all the way down here, right? And starts to go in our favor more, and then comes back, and then we exit the position here. The max favorable excursion is going to be this level, right? This distance, if you will, from zero. So MFE, max favorable excursion. It doesn't matter where the P&L is. It's looking inside the P&L. What could the P&L have been during the time you held the trade? Doesn't matter what happens after for this stat, although that can be helpful. We're looking at during the trade, how much potential profit was there? And as you might could imagine, how much heat did you take? max adverse excursion. So these are great stats to dive deeper into your trading. You know, you look at a trade and you say, okay, I made $400. Well, what if the profile, let's say you got long here and you made $400, but let's say that it did this, you know? Or let's say that it did this. You made $400, right? Those are two very different $400 winners. And only by looking inside the P&L, beyond the P&L of that particular trade, are we going to get that more granular, insightful information. And that's where MAE and MFE come into play. And so what do I look at? And we're going to look at these things. We're not just going to look at the words. I like to look at win percent, how it's over every 20 to 30 trades. You know, a rolling 20 to 30, and we'll just call it a rolling 30, okay, means that over the past 30 trades, here's what the number is. And then once you have your very next trade, your 31st trade, right? Well, now we have a number that encompasses everything but this last trade. It's no more, and now we're only using this, right? And then it says, okay, let's look at these 30, and then these 30. So the old one drops off as the new one comes on, but it's always 30 trades, most recent 30 trades. So that's what I mean by rolling 30 trades. We look at the win percent for that. We look at how your favorable info is looking, how your adverse is looking, almost like we look at average winners and average losers, and then the ratio of average winner to loser. In this case, it's favorable, adverse, and the ratio of that favorable to adverse excursion you're seeing. So let's take a look. Hypothetical stuff. I don't know where this data came from. It could be over, I guess, September of this year. But, you know, we're taking a look at the days. What did the winning days look like versus the losing days? You know, overall equity curve and drawdown compared to P&L. Trade distribution by hour of day. Interesting. Looks like 1 p.m. here. And it's got some decent, you know, volume. This trader is trading, you know, kind of the main active pit session, if you will. And so that's interesting. A little more selective during, let's call it the lunch hour, right? 2 p.m. is where we start to get half an hour till crude oil closes. Then we got the hour until equities close, and performance is good there. But lunch hour is an underperformer. So that's something we could garner from that. Snapshot of the statistics here. What's the average winner to average loser? Just north of 2 to 1. Win percent 42%. So that's standard, really good NADRO trading. I think that's you know, if you can hold 2 to 1 and keep your win percent in the 40s, that's great. It really is. I think a lot of people get bogged down and say, you know what, that, you know, 50-50, 2 to 1 is like chump change, you know, that's nothing special. No, who are you kidding? If you can hold that kind of positive expectancy, that's very, very good, very profitable trading. And here we are, well, largest gain 18 versus 58. So a healthy ratio, right? A very healthy ratio there. That's what's very important. Although it does look like loss got a little out of control here compared to what an average loser is, right? That's That's quite a bit. So that would certainly be the case. Average hold time for winners and losers. This is 17 minutes, maybe something we'd like to see get a little longer for a NADRO trader with, needs to do a better job of holding core positions. But in general, twice as long. That's at least it's good. Depends on what your goals are and what your niche is. This data here is flat to flat. It's all flat to flat data. It's pretty, I think, individual fill data is pretty meaningless. You want to look at when you got in and when you were finally out, and then that's one trade, no matter what happened, whether you added to it or scaled out along the way or whatever. That was one trade. And within TraderView, which is what we're looking at here, you can set how you want it to treat those, and that's what this is set to. Rolling stats. So, I think there's something really good about being around 40. And so obviously, kind of a linear regression, that's probably about a flat line where it would be. Holding nice, healthy 40s here. Looks like there was a little bit of a problem here. Whoop, came back to that healthy zone there. So that's looking good. But see how powerful it is? We're looking at over 200 trades here. And how it's not just a snapshot of win percent. Remember, we looked at win percent. It was like, what, 42.5 or whatever it is at the end here, somewhere around there. But, in fact, this data is just over September. It would be even better to look at this data like on a real monthly review with a lot more data from the beginning of the year and to see where you are, here compared to some of that longer term data. But we could pretend this was a full year, right? Early part of the year, you're here, and then summertime, you traded poorly, and then you brought it back, and you're trading better here, right? So you could even change your periodicity to like 100 trades or something like that to make it a slower moving thing. So win percent's looking healthy. MFE, wow. Looks like the favorable movement, is stepping up here. We're seeing around $800 to $1,000 of favorable movement for a while, and then either this trader started to size up a bit more or started working on holding core positions longer, something like that. But they favorable movement up here at 2,500 now. That's 2.5 times essentially of what it was. Now, the question is going to be, what was the risk taken in order to achieve this, right? This is good if we just consider it on a standalone basis, but we need to look deeper. So what does the risk look like? That this is favorable excursion on a rolling 30 trade basis, adverse excursion. Okay, so there was increase in risk as well. So risk, I don't know where you average this, 500, I don't know. And then it picked up to 1,500 and then slacked back off here. So something changed with the risk taking here. So, it seems like it's going to be a little bit normalized. So let's just go to the ratio and see, again, taking this data relative to this data, and let's see what the ratio is of favorable to adverse movement. Okay, so this is kind of almost a normalized graph where we can see, okay, here's 1-to-1. So again, when that win percent dropped, looks like there was a period of underperformance here. But in general, nice recent improvement. Even though the risk was expanded, the favorable movement was expanded at a greater degree. So over that period, we have seen this trader improve their risk reward. And so that's good to see. In general, this trader able to hit, 2 a good bit, but in, an average, if you will, is probably 1.7, something like that. So not the absolute best performance here. But it's certainly nothing to shrug off. It's a good month, and whatnot. Developing this week. Continue working to put it all together. Long-term view. Like, we didn't introduce any new charting or analysis here this week. So it's great because where we got you to last week, it's a place where there's a lot of work to be done. And so what can we do to help that as we continue on that journey? Keep working on your hypos, having a read on what's happening. Actually trade, number 2, using DVA as a loose framework to get into those narrative-based ideas. And then 3 and 4, what we're adding. A lot of you are doing a lot of these things. Hopefully there's been some nuggets and some takeaways and some really good stuff for many of you on the call today. Incorporate the prep, journal, and review cycle into what you're doing on a daily basis. And you're going to see your gains in terms of improvement, not necessarily P&L right away, but you're going to see those improvements ramp. In fact, one sure way that you're going to realize you're probably getting better is if you start to feel like you're getting worse. That's actually a sign of improvement a lot of times because you're more aware of errors. You're more aware of things you were previously oblivious to. So if you start to get down on yourself and say, I'm getting worse, you're probably getting better. So we're going to incorporate prep, journal, review. We've given you great templates for that and best practices. Feel free to tweak it and make it your own. And then number 4, this is a big deal. Start getting some documentation, risk plan, trade plan. Start thinking through your trading business. Start thinking through the type of setups that you're enjoying the most and you want to kind of refine and get really good at and those type things as you're kind of going through this fast-paced, intensive, exploratory process of putting together what a good NADRO trade looks like. And so probably for some of you, that's already starting to happen. You're starting to see, I really like this or that. And that's going to evolve over time, and you're going to experience different market regimes, bull markets, bear markets, low vol, high vol, all that good stuff. And that's part of just the wisdom of an experienced trader is that they've seen those things before and they've got the toolkit that they can go pull out. Okay, my friends, that is it for today. Let's have a great week. Cheers.